Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a positive start, indicating a rebound of sorts in financial markets. SGX Nifty points to a positive start in India as well. The sell-off in shares of Amazon and Alphabet has wiped out $82 billion of shareholder value. Amazon's $66 billion drop in market cap is the biggest single-day fall ever. Lower provisions and high net interest income led ICICI Bank's return to profitability in the September quarter. Asset quality for the lender improved as well. And lower inventory gains and a weak rupee are likely to weigh on BPCL's second quarter profit. Gross refining margins are likely to see an impact as well. And RBI Deputy Governor Viral Acharya stresses on the importance of central banks, says that governments that do not respect central bank independence incur the wrath of the financial markets and ignite economic fire. Let's talk about the US stock market and the end on Friday. It wasn't a good session for them. They're back in the red for the year after another wave of selling hit Wall Street on Friday. A 3-week slide has left the benchmark S&P 500 index on track for its worst month since February 2009, right before the stock market hit bottom following the 2008 financial crisis. Traders are also worried that rising interest rates and the escalating US-China trade war could hurt the economy and dampen corporate earnings growth. Bloomberg's Michael Regan sums up all of Friday's action in this report.
It was another ugly day in the U.S. stock market, with the S&P 500 falling about 1.7%. The benchmark index is down about 9% in October. It's poised for its worst month since 2009. Today it was Amazon.com that was the biggest drag on the index after the company's third quarter sales and some of its forecasts for the fourth quarter missed analysts' estimates. Amazon shares dropped about 8%. That's the worst day in 4 years for the stock. Other technology-related stocks like Apple, Facebook, and Microsoft were also among the biggest drags on the index. But there really wasn't much of an upside in any of the sectors. Among the 11 main industry groups in the S&P 500, all finished today lower. In other markets, treasuries found some safe haven demand, with the 10-year yield dropping about 4 basis points. And a rally in the dollar finally cracked, with the Bloomberg Dollar Spot Index dropping from its highest level in a year. I'm Mike Regan with Bloomberg News in New York.
All right, and after, in fact, that market, we had market close rather, we had the update on US GDP growth for the third quarter, which, by the way, came in at 3.5%. So 2 quarters of quite strong growth coming for the US markets. Perhaps that's the positivity that the Asian markets are taking into trade today. The 3 early rises had started with gains with quite healthy gains. In fact, the Nikkei was up about 1%. But it has lost ground since the opening of the Chinese markets. In fact, the 2 Chinese benchmarks are down 0.5% and over 1% at the moment. You also have Hang Seng that is opened up, but the Hang Seng is opened up in the green, about 0.6% higher. The Kospi is up about 0.3%. That's pretty much how the Asian markets look at the moment. That picture could change once you have a few more minutes of trading in the Chinese markets, and we'll get you an update once they do. But for now, let's turn to Darshan Mehta, who's joining me now for the trade setup for the day in India, and also to tell you what's happening in the futures and options space. Darshan, from what I can see, it's still indicating a positive start for the Indian markets. How's it looking?
Yeah, so I'm also pretty surprised that global cues were rather weak. Asia is not doing that well, but the SGX Nifty is indicating a gap up of almost 86 points at this point of time. So probably that's something that probably might change as we come closer to trade. This is an indicative rate of how we expect our markets to open. How did the ADRs pan out in trade? Basically, ICICI Bank was the one almost up 5% post the numbers, and so watch out for the Nifty Bank, because ICICI Bank has a large weight on the Nifty. Dr. Reddy's was another counter which was up almost 3%, mirroring what happened as far as the Indian markets are concerned. But the other ADRs were rather weak in trade. Now, as far as how our markets panned out in trade, we had almost a 100-point cut on the Nifty, but there was the underperformance of the Nifty was much higher than the broader markets. So the mid caps and small caps also down, but not as much as the Nifty. Now pull up the Nifty Bank and the Nifty PSU Bank, and you can see that there was pressure that was coming in on the Nifty Bank, not so much on the Nifty PSU Bank at this point of time. Some of the sectors which managed to underperform, FMCG continues to slide, and IT over the past few days has been rather weak in trade. So that's the broad setup that we are looking at. As far as flows are concerned, FI sold in 1,300 crores, DI has bought in almost 1,800 crores in the cash market. How did the Nifty pan out in trade? It was down almost 95 points. The heavyweights contributing on the negative side, TCS, ITC, Axis Bank and Kotak. What led a little bit of support was Reliance and HDFC. UPL moved up post the numbers that came out, but nevertheless we ended down almost 95 points. How did the FNO market pan out in trade? It was a new series. So the first day fresh short positions were taken. We came very, very close to the 10,000 level in trade. So there was fresh shorts that were happening. As far as the Nifty Bank is concerned, it saw open interest build up of 6%. The index was down 1.5%, so there was enough pressure that was happening on the Nifty Bank also. As far as where positions are taken, 10,000 seems to be the big support that the market is taking. If the 10,000 is broken, there will be substantial downside that the market is seeing. And put writers and call writers are active from levels of 10,000 right up to 10,500, which seems to be the broad support resistance that the market is looking at. What happened on Friday, the first day of the new series? And you can clearly see that put writers had to shed positions in open interest since the market was coming down, but they are actively taking positions at 10,000 and 10,100. We are at these levels. If the market slide continues, there will be more selling pressure that will come in. As far as the stocks in the FNO band is concerned, only one stock is there, and that is Adani Power. If you're looking at the Nifty PCR, that moved up from is at 1.44 versus 1.49. The Nifty Bank PCR was also down. It moved down from a 0.85 to 0.66. A couple of stocks that I want to highlight. Equitas, fresh shorts, open interest build up of 60%. Obviously, corporate news impacting both Equitas as well as Ujjivan, and both of them are trading now below the IPO price. The other stocks that we want to focus is Grasim. So high open interest build up of 16%, that too on the short side. And finally, the last counter is Raymond. Short covering was seen, open interest was down 3%. Post the numbers, the counter managed to climb up almost 12% in trade.
Thanks so much for that, Darshan. Let's also talk about the other two markets. In fact, I'm talking about the currency markets and the bond markets. The rupee depreciated by 20 paise to close at 73.47 against the US dollar on Friday. And that's in the context of a stronger dollar globally and sustained foreign capital outflows from India. A global risk aversion has seen foreign institutional investors pull out $3.1 billion from the local shares this month, the most since January 2008, and that was during the financial crisis. The debt market has also seen an outflow of $1.5 billion. Sovereign bond yields too have cooled 15 basis points after this month, after climbing to a 4-year high in September as the central bank bought debt to replenish liquidity. The central bank has done 560 billion rupees of purchases so far in the second half of the financial year that began in September. On Friday, the authority said that it would buy 400 billion rupees of bonds via open market operations in November. The dollar rose to a 10-week high on Friday ahead of its US GDP data release. Let's shift now focus to commodities, and Yash Upadhyay is joining in with all the updates there. Yash, what are you picking up?
Good morning, Alex. So crude oil prices, they have slipped for a third straight week as crumbling equity markets stoked concerns about a slowdown in global energy demand. Friday's 0.4% gain on the New York Stock Exchange wasn't enough for the crude to halt its 2.2% decline for the week. A closely watched tally of US rig activity also indicated that drillers intend to step up crude oil output, as a result of which crude oil has shed close to 8% of its value so far this month, wiping out all of the gains of August as well as September. As far as the base metal space is concerned, copper, nickel, tin and lead all dropped in trade, while zinc and aluminium snapped their multi-day losing streak. Copper futures slipped for a second consecutive week in New York, driving industrial metals lower on concerns that trade wars will curb global economic growth as well as their demand. Pressure is also seen on the pricing side as yuan slump against the dollar will make will result in prices going up further, making the commodities expensive for buyers in the top market of China. On the precious metal side, gold continues to see strength, with gold futures rising for a fourth consecutive week, its longest winning streak since January.
All right, thanks so much for that, Yash. But there is some context that perhaps you'll receive from this conversation between Ed Morse, the global head of commodities at Citi Research, with Bloomberg's Francine Lacroix, and they discuss Saudi Arabia's influence on the global oil market, and he expects the prices to rise in the fourth quarter.
They've shown themselves in the past. The long-term consequences are rather dire. It not only brings about a lower level of demand, probably through a significant recession, but it also spurs on growth in alternative fuels and growth in competition from the United States and other non-OPEC countries. So in the
Ed, have you ever seen? Right. Have you ever seen the, OPEC and its allies kind of go from one thing to the other quite so quickly? So 2 days ago, we had the Saudi Arabian oil minister saying that they're going to pump as much as they need to. And now, because of inventories, because of concern about economics around the world, they're talking about curtailing it.
Well, they're a little bit confused about the market. They didn't look at the thing they've been studying for the last 3 years, namely how financial flows of the market impact prices. They didn't look to see that when oil went to $86 for Brent crude and WTI went up, that was a function of financial flows of the market. The managed money situation in the market went from one record level of a ratio of longs to shorts to another, went right through the old record of 10-to-1 longs versus shorts to 11 to 12 to 13 to 14. The price went up with it. And then for a number of reasons associated in part with the fundamentals not changing, there was a sell-off. That sell-off has continued. So we've actually seen two $10 swings that have nothing to do with market fundamentals, have a lot to do with financial flows. And had they just waited a bit, they probably would see that markets are going to get tighter by the end of the fourth quarter. Prices will go up. It's a volatile world, and that's the lesson they should learn, not to speak on the basis of financial flows.
All right, on to earnings now. Oil marketing companies have had a turbulent last few months owing to a rise in crude oil prices, and Bharat Petroleum is likely to report a muted quarter this time around. Low inventory gains and a weak rupee are likely to play dampener. But to tell you more and to tell you all the details here, Somit Sarkar is joining us with the key expectations. Somit, what are the headline numbers first of all?
So for BPCL in the second quarter compared to last quarter, revenues are expected to be higher by nearly 9% to close to 78,000 crore rupees, while the net profit, now that is expected to decline nearly 22% to close to 1,800 crore rupees. EBITDA is expected to be lower by around 18%, while margins are expected to contract to 4.1%. Gross refining margin, that is the key number for the oil marketing company, that is expected to come in at around $6.5 per barrel versus $7.5 per barrel reported by the company in the last quarter. Now it is expected to be a muted quarter on the back of lower inventory gains and a weaker rupee. Now inventory gains are expected to be lower because of relatively lower increase in crude oil prices. Now if you see, Brent crude averaged around $75.89 per barrel versus $74.97 per barrel. So this limited hike increase in crude oil prices will result into a lower inventory gains for the oil marketing company. Now ex inventory gain, if you see, the steady refining and the inventory refining and the marketing business were quite steady for the oil marketing companies and also for BPCL. Now the gross marketing margin earned on sale of every liter of petrol, and that averaged around 1.6 rupees per liter for BPCL versus 1.5 rupees reported by the company in the last quarter, and for diesel it averaged around 2.2 rupees per liter versus 1.9 rupees. So you can see a steady marketing performance from BPCL in the second quarter. Now if you see the operational numbers, the crude throughput, that is expected to be low by nearly 3%, and that will be because of the fire incident seen in one of its refinery in the second quarter, while sales are expected to be seasonally down by nearly 0.6% to 10.9 million metric tons. Lastly, key things to watch out for, now that would include the crude sourcing strategy of the oil marketing companies amid the Iran embargo and decline in Venezuela crude production. Also clarity on the strategy due to absorption of this 1 rupee impact on petrol and diesel prices. So what will be the strategy will be a keen thing to watch out for, and also the impact of the fire incident that happened in Mumbai will be a keen thing to watch out for from the BPCL earnings.
All right, thanks Somit. I'm sure You'll have all the details once those results come out. Do watch out for that over the course of the day. But there's something that you have to watch out for in trade today. A decline in provisions and a high net interest income aided ICICI Bank's return to profitability in the second quarter. Asset quality for the lender improved as well. Shraddha Babla is here to tell you how that came about. In fact, Shraddha, strong numbers from ICICI clearly.
Alex, if you look at the net profit number, it fell by about 56% on a YOY basis, but that was only on account of the stake sale gains from ICICI Lombard that was there in the base quarter. But the net profit came in at 909 crores. You also need to remember that compared to estimates, we can argue that the numbers were a miss, but the range of estimates, remember, were very broad. So while there was a miss as far as the net profit is concerned, the quality of earnings seems to have improved. The core operating profit growth, that is, leaving the ex-subsidiary stake sales, came in at about 16%, and that is after a gap of 3 to 4 years that we've seen this kind of a growth. Even if you look at the fee income growth, that came in at 17%, which is a multi-quarter high. Third, as far as the loan growth number is concerned, that also picked up pace and came in at an 11-quarter high of 13%, largely led by the domestic loan book growth, which also saw a strong growth of about 16%. On the provisioning aspect, that came down on a sequential basis to 3994 crores. In addition to that, the provision coverage ratio also improved by 330 basis points sequentially to about 69%, and this, remember, is in addition to the 560 bips improvement that we had seen in Q1. So over a period of 2 quarters, they have taken up their PCR by 9 percentage points. Asset quality trends also, it seems, are stabilizing. In fact, we are seeing some moderation as far as fresh NPLs are concerned, and there's also been a decline in the stress loan outside of the bad loans. So if you look at the gross NPA number, that came in lower at 9.30% as compared to 9.65% in June. Even if you look at the gross slippages number, that saw a decline of 23% on a Q-on-Q basis, coming in at about 3,100 crores. That also is the lowest that we have seen in the last 12 quarters. The net reduction in the stress book was also at about 21,800 crores. That's down from about 24,800 crores. So with all your management concerns having been put to rest, the focus has now shifted back to earnings. And did the earnings growth deliver in this quarter? I would say yes, it has. Largely, analysts do remain positive on the stock on account of their attractive valuations. And for some like CLSA, this continues to remain among the top picks.
Absolutely. And in fact, it will be at the center of action in trade today as well, Shraddha, considering the results. What are the other stocks that you're watching in the news and that are likely to move today?
Right. So, of course, the first one, like we discussed, Alex, is ICICI Bank, where the ADRs ended about 3 or 4% higher. But a couple of other earnings as well. Vinati Organics, very strong set of numbers. Revenue growth of 57%. EBITDA doubled to 95 crores with a solid 800 bips improvement in the margins as well. You also saw net profit come in at about 65 crores, which is on account of lower finance costs, higher other income, and also lower raw material costs. Divis Labs also saw a strong set of numbers. Revenue growth of 44%. EBITDA margins came up to about 40% versus 31% in the year-ago quarter, and the net profit jumped by 92%, a part of which can be attributed to a forex gain of 53 crores in this quarter as compared to just 11 crores in the previous quarter. But nevertheless, aside of that one-time component also, it is a good set of numbers. Nestle India, revenue growth of 17%. Net profit growth of 30%. Margins also came in about 150 basis points higher at 24.7%. Imami Paper Mills is another one that we're watching out for. Revenue growth of 30%. Net profit growth, net profit has come in at 17 crores on a low base, and EBITDA margins have also improved to about 15%. On the other hand, numbers from Jindal Stainless were disappointing. So while revenues grew by about 18%, the company reported a net loss of 36 crores in this quarter. There was an exceptional loss of 53 crores, but even if you look at the operational performance, EBITDA fell by about 10% and the margins came off to about 7.5%. Similar is the case with HT Media. Weak set of numbers. Revenues fell by about 6%. The company reported a EBITDA loss of about 20 crores as compared to 95 crores profit in the previous quarter. Net loss has come in at 39 crores as compared to a profit in the previous year-ago quarter. There was an exceptional loss of 24 crores in this quarter, which was towards a dispute which is pending hearing. But even if you look at the finance cost, that has gone up sizably, so has the other income and the input costs. Cox & Kings is the other one that one should watch out for. The company will sell its education arm to UK-based company for an enterprise value of 4380 crores. Remember, the current market cap of Cox & Kings itself stands at about 3,200 crores. The total debt as of March 18 was at about 3,900 crores. So this is a positive development for the company. And finally, you have Axis Bank, which will sell 4.95% stake in NSDL to HDFC Bank for about 163 crores. So small positive for that one.
Right. Thanks so much for that, Shraddha. Long list today. Well, let's talk about some of the stories that you'll find if you look up the website. That's BloombergQuint.com as of now. First up, Tesla's chief executive officer Elon Musk said that he was signing off of Twitter for a few days, and that was shortly after tweeting that the $20 million penalty that he was given for announcing on Twitter that he had funding to take the electric vehicle maker private was worth it. Soon, GST officers will study the behavioral pattern of certain taxpayers to nudge them to comply with tax laws in a departure from the current practice of focusing only on deterrent action to check evasion. The Central Board of Indirect Taxes and Customs has set up a nudge team to formulate a strategy on studying behavioral patterns of taxpayers and use a segmented approach to encourage them to pay taxes, according to an official. In the week ahead, the Bank of England and Bank of Japan announced policy rate decisions after raising rates in August. The BOE is expected to stand pat, while the BOJ is also expected to maintain its policy settings. And Apple hosts a new product event at which it's likely to introduce iPad Pros that use facial recognition to unlock, and also new Macs. Asia will get Japan retail sales and China manufacturing PMI, which will show whether US sanctions have started to bite, and US jobless claims are also out this week. Now, China schools India when it comes to the number of electric four-wheelers on the road, but India wins when it comes to electric three-wheelers. E-rickshaw drivers in India have discovered that the vehicles are cleaner and cheaper to maintain. India's fleet of e-rickshaws has grown to about 1.5 million. That's bigger than the total number of electric passenger cars that are sold in China since 2011, despite little help from the government. Here's more. Have you used an e-rickshaw? Tell us about your experience. I used one in Lucknow. I wish there was some in Bombay as well. Well, with that, that's all we have for you in this edition of Daybreak. Up next is All You Need to Know.
It's